Hey guys, this is a quick follow-up to yesterday's ES vid. So yesterday we were looking at the weekly log chart and we were thinking about, if this is all of five or if this is going to subdivide and, this is only one of five. And if that's true, what would be the anchor for wave five extensions? And I think I have some clarity about that. So first, I just want to go back and look at that 87 fractal again. You know, Leading up into 87, when we broke above this established primary channel, we broke above in mid February and we came back below in early September. So, sort of a spring to fall sort of distribution above. Similarly, in the run up to 2000, the first time we broke above in February, March, and we broke back below in August. So again, sort of a early spring to fall sort of distribution. And in the current situation, we broke above in March, actually end of March, so we're a little later. And so potentially we are on schedule to fall back below in end of October or even November. So I just want to point out those fractals and how we may be just repeating history here. As far as fifth wave extensions, this is what I'm thinking. Again, going back to 87 and looking at that, when we came back, this was a big blow off fifth wave top right here, and the extension would come from the top of wave three for this degree of trend. I think that's what we're looking at. And so in the current, taking the simplest case first, this current bull market, I can't annotate in Thinkorswim, but quickly, very simply, what this would be a one, a two, a three, a four, and then this is either all of five or it's one of five. And then, within this wave three, there's a one, there's a two, there's a three, there's a four, and there's a five. And it's actually unclear, it's ambiguous whether this is the top of wave three, this little overthrow here, or whether this is the top of wave three. But if wave five is going to extend and subdivide, I think that one of these two would be the anchor for that fifth wave extension at this degree of trend, right? This entire market, bull market. And so, we're working on the assumption that this is some sort of expanded flat correction, and either this or this is the top of wave three. I favor this one. And so if we draw, the top of wave three to the top of wave five, this gives us a potential retracement level. But we have to track this one as well and see, which one gets a reaction. They are about 30 to 40 points apart. And so this is the scenario for extending this fifth wave at this degree of trend, right? Extensions coming off of the top of wave three. But there's a question of whether we have already traded a wave five extension anchored at the top of this wave three, which would be sort of the largest degree of trend, what we might call, a super cycle wave five extension. And, to make this more clear, I'm going to weight these heavier. So it is possible that we have already traded one fifth wave extension off of this level. I'm not super happy that it dipped in like that, but we are seeing a reaction off the 618 target. And we actually dipped in a little bit. So it is possible that the next wave 5 extension would come from this high to high extension. like that. And to again make clear that this is sort of the super cycle degree of trend, I'm going to weight these heavier, like that. So, it's paradoxical. The more shallow retracement would actually be big picture more bearish, because it means we're trading fifth wave extensions off of this wave 3. And so we're in the process of making a major market top. And that would be a wave 3 of 5. This would be a wave 1. This would be a wave 2. And then we would potentially go up in a wave 3. And that target is up at, it seems incredible, but the target is at 52.25 more or less. So these are the possible fifth wave extension levels I think we need to track going forward, and which one we trade off will tell us what degree of trend we're at. Is that everything I wanted to say about these weekly setups? I think so. And so, just to emphasize, the current series that we're in has not broken. So let's go to the daily chart here. And actually, let's go to the hourly chart. It is possible, sort of the minimum expectation for an ABC correction is that you have an A, maybe we're in a B right now, and then we'll either bounce and get a C, or we're already in the wave C. And so, we can use the fib extension tool to measure the way, so this could be a simple ABC correction, right? And if that's the case, you want to measure wave A. I think it ends right here, but we'll measure the larger wave just to be less conservative about it. And then you pull to the top of this corrective wave, and you can then measure how long wave C would get. And so it is possible to have an A, B, C correction here where A equals C and still not break the weekly extension. I just wanted to point that out. Technically, the uptrend is still intact, and it's still possible to have another bounce before we potentially and eventually break back below the purple channel. We could go up to 46 something and then come back down, which would confound a lot of traders who are essentially looking for a repeat of last fall. So the measured move would break, everyone is getting bearish, getting short, and then rip your face off right there. So I'm staying open to this possibility. And don't forget that twice we've had the weekly extension dip in the first time and then hold the second time. It happened last fall, and then it happened in May. We dipped in and then held. We don't have a lot of wiggle room here, and I think it would be a problem if we broke below this pivot right here. So we have just a couple points to play with where we could dip in, but ideally we don't want to break this low. So again, I am not by nature bullish, but the trend is not broken. We can correct and bounce here. We just have to keep an open mind about that possibility. So we could bounce on Monday and then go down, or we could just go straight down on Sunday, Monday, and then sort of consolidate down here. And for the Fed midweek, we could go up instead of going up and then going down for the Fed. So keep in mind both of those sort of potential scenarios. Is that everything I wanted to say? I think so. Okay, thanks guys.